You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and it is Thursday, September 23rd. Well, if you're like me, you've probably been looking for more yield, ways to get a higher return on your investment, something that I've been talking to a number of people about, and that is investing in mobile home parks. No, it's not like what you see in the movie where there's a bunch of meth cooking going on and drug addicts in various stages of personal destruction. No, the reality is much more different. But if you listen to the media, you believe a lot of things that aren't true. So if you're interested in this, you think it might be for you, why don't you send me an email to kl@kerrylutz.com. And right now with us again is Charlotte Dunford. And Charlotte, hey, this has become your mainstay here for quite some time. And Jones Creek Capital, it's kind of your baby. So what's going on with the mobile home market? Are you running out of places to invest or what?
Yeah, thank you for having me on the show. Yes, so Jones Creek Capital is my baby, and we are actively sourcing deals and investing in this market, especially in our niche, which is focused on most small to medium level mobile home parks. It is I would call it almost a completely different asset class than what a lot of investors focus on, which is they only focus on parks with 100 lots and above. For obvious reasons, economy of scale. But for our niche, we do have many, many advantages. And the reason why I love this niche, that we're in this niche, is because we are able to acquire parks at an incredible cap rates in great markets at 8% cap rate and above. That is why this niche is often overlooked and a lot of times ignored. So as of now, we are just really rapidly acquiring deals, primarily focused on the Midwest and the Southeast due to its high cap rates and great meat on the bone left for investors. And this industry is consolidating. It is harder to find deals, but in our niche, it is still a lot of room to grow. I would say we are in the beginning 20% of the timeline of the curve of this niche, this particular niche within a niche market already, mobile home park industry.
Well, now we talked last time as far as communities inviting in a new mobile home parks. That's a very rare situation. It's kind of like beachfront property. They're just not making anymore, are they?
Exactly. You're 100% right. I think the biggest challenges for any mobile home park developer is the zoning and the county zoning law offices. The primary reason for that is because of taxes. And a lot of times cities consider them an eyesore and they do not really want mobile home parks. And just the stigma around it means that developing new mobile home park is extremely difficult. And we believe that we believe this to be true, that once the mom and pop mobile home parks are consolidated, there's not much more money to left. But I will believe that statement is kind of half true, because there is always going to be a need for affordable housing. And as long as the human need for shelter exists, the real estate business will exist. And as long as real estate exists, the need for a less expensive housing option would exist. That is the affordable housing option. So because of the zoning requirements, and it's extremely expensive to develop new parks, and that is why the supply of mobile home parks is kind of fixed, which means the demand is ever growing and the supply is actually always, there's a shortage as always. That's why this industry is making a big comeback.
So I read an article in Zero Hedge, not that it's a perfect source of information by any stretch, but they said that inadvertently the government is making it, is indirectly causing people to be evicted from mobile home parks because as a result of government policies, rentals are going up, it becomes less affordable, and therefore the tenants can't pay. And and then they wind up being evicted. What's your experience in this?
Right. So during the pandemic, it's actually really interesting. Johns Creek Capital was created, well, we started acquiring parking in 2019. We were created in 2020. So we kind of grew with the pandemic. So COVID started when we started and we grew with COVID. So we really haven't, if you know, we really, went through a lot of this. It's been quite a journey going through the pandemic being in this industry. So I would say that evictions has been there has been a halt on the evictions because of the moratorium, and the government's policies would definitely. I wouldn't say that it stops tenants from being able to pay. I would actually argue that the government agencies have been issuing quite a bit of rental assistance to tenants in mobile home parks. So throughout this time, actually, when non-payment becomes an issue, because when times get really tough, tenants at mobile home parks sometimes cannot afford to pay rent because they're not working anymore. So in that case, the government, the local authorities, state programs actually have a lot of assistance for mobile home park tenants to assist them in this housing crisis. So we've received quite a bit of rental assistance funds from governmental agencies to help those tenants. And we are obviously able to, we're willing to help tenants who are willing to help themselves. So we actually sometimes we apply on the tenant's behalf. So in a way, the mobile home park industry is actually sort of protected from, it's a double-edged sword. So the policies can make or break you. In our case, there are definitely pros and cons to what the government's role in this whole pandemic.
All right. So, what about tenant-wise, as far as when you do have vacancies? What is the process like filling those vacancies? Are you like inundated with prospective tenants?
Right. So when there is a vacancy, because we do not own those homes, in the most cases, the tenants own those homes. We own the parking lot. So sometimes tenants move away and they're vacant, but they still pay the parking lot because their home is still parked there. They would not want you to destroy their home. Just like if you park in the parking lot, just because they're not sitting in the car doesn't mean that you don't have to pay for parking. You still do. So in that case, that would be the best case scenario for us. But in many cases, they did not pay and they just kind of abandoned the home. In that case, the best thing that we can do is to contact the tenant and try to have the tenant sell the home to us at almost $0 or just give the home to us, or have them connected to a mobile home park, a mobile home investor, and have that tenant sell the home to that investor, so that the investor now becomes a new tenant, which parks on our lot, and we receive a lot rent. At the end of the day, we do not want to get into the fixing furnace business. We are in the parking lot business. So that would be the second best option. The third option, which is pretty common as well, is to there's a huge long process. This is going to be very time consuming, is that you go through the court system and you try to evict this tenant, this home, as if it was a tenant, and you ask this tenant to remove his belongings from our parking lot, which is our mobile home park. And if he does not, the court issues an order, and just like you would evict any tenant from any other housing option. So that process takes the fastest 6 months. So it would be a very time-consuming process. After the tenant is evicted, we have a process to go through with the courthouse to repossess the home and get the title in our name, fix it up, rent it out. And that is, like you can tell, it's very, very time-consuming. So that would be the least desirable option.
So that's to be avoided if at all possible, right?
Exactly, but that is an option and it is viable, but it's just extremely time consuming. We would try to avoid it at all costs. Sometimes it's just better to leave it alone and try to connect the tenant with a buyer than trying to do everything by yourself, because you will be better off for focusing your resources on things that will yield better profits.
Interesting. So, but I assume your screening process is pretty rigorous and you don't have a lot of these situations coming about?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper gold early stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita Copper Gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, absolutely. The screening process is extremely rigorous for us, and part of it is my personal experience. So when I first started real estate investing, I just came out of college, and I did not have a lot of experience screening tenants. So that was my first property. I was like maybe 24 years old, and I just did not understand that it was extremely important to screen tenants. So the first tenants I've ever had that had to evict 2 months into the residency, they stopped paying, and the eviction and attorney costs, cost me probably added up to $10,000, and that I'm still chasing after that money today. So that really taught me a lesson early on in my real estate journey to really screen your tenants. They're very, very difficult, tough and specific qualification criteria that we have for our tenant base, because especially the mobile home park business, right? Because mobile home park a mobile home park tenant is more like a stakeholder in your business rather than just a tenant, because they are kind of hooked up to your utilities and it's really hard for them to move. So to have a bad actor in your business, considering having a terrible person on your board or a bad actor on your board, imagine how damaging that would be for your business. So we are extremely strict with that process. And now that the biggest difficulty is not when we screen the tenants, it's when we inherit the tenant from the previous seller. And that way we kind of get what we get. That's why it's extremely important to do your due diligence and making sure that all tenants are solid.
Wow. Interesting. What's the average rental? So they own their trailer, however they financed it, whatever, and then they're renting space from you effectively, right?
Correct. So the national average is about $225 to $250, and that depends on the geography, of course. Here in the South, you can find parks in a kind of depressed markets for, less than $100 in lot rents, and some in the Midwest, the number is close to $300. So it depends on the markets. That's the lot rents. On top of that, sometimes they pay for, depending on the utility structure, they pay for electricity, water, and sewer. Sometimes we pay for it and then we just bill it back to tenants. So actually, two of the biggest value adds of a mobile home park asset is to increase rents upon acquisition. That's something we always do, and we do it according to the state law, and we have to give proper notice. And we look at the market rent, and we don't want to raise it more than $50 per year, because that would be too much for tenants and you'll meet a lot of resistance. And another thing is to bill back utilities through sub-metering, which is a value add strategy that we're currently carrying on in some of our mobile home parks.
Mm-hmm. Okay, so when you're buying, seeking to acquire a new park, are you looking for value adds?
Absolutely, yes, yes. So we are looking for sometimes, some cases, light value add, some cases heavy value add. So for value add parks, it has to be there are certain. We have a proprietary algorithm to sort out the deals and to determine if a deal passes. We have a scoring system. If it passes a certain score, we're considered pursuing it. So when we look at a park, it's usually it can't have a extremely high vacancy, like 95% vacant. That's unless that's in an extremely good market in an opportunity zone, then that becomes a development project. In some cases, the local government actually quite keen on developing new parks because they have a need for affordable housing. But for most cases, we're looking at value adds, light value and heavy value adds. If you're looking at light value add, the return is usually about 15% IRR to 18% IRR within 3 to 5 years of holding time. If it is a heavy value add, the return will be much higher, would be at 20% and above. But then again, that might take longer and, of course, higher risk and higher potential for reward. So I think it's just up to each individual investor on determining what works for them and what kind of their risk tolerance.
Got it. So, when you're putting these deals together, you mentioned opportunity zones. Have you done deals in opportunity zones before?
Yes, we have. We have done 3 deals in opportunity zones. 2 are in Kentucky, and those are development projects, and we got it for 5% of their appraised value. So extremely good deals. And another one that we have in Georgia here, in Georgia, and that is close to, excuse the noise in the background, that is close to a power plant with extremely good job opportunities. And that is also have worked quite well for us. So yes, it's, yeah, definitely.
All right. So if somebody wants to invest with you, how does that work? I assume only accredited investors?
Yes, I think we mostly take accredited investors. But if you're not accredited and have relevant experience in investing or real estate, let's say if you're a real estate agent or someone with investing experience or working finance, working real estate, working in related industries, that's okay too. But mostly accredited investors. And yes, and if they want to reach us, the best way would be to go to our website at johnscreekcapital.com. And once you get to the website, there will be a contact form, or you can call me directly at 470-265-0911.
All right, excellent. Well, we appreciate you coming on. Any questions for Charlotte, shoot me an email to kl@kerrylutz.com. Don't forget to sign up for our free newsletter at financialsurvivalnetwork.com. We just sent one out today, and the title was 10 Things That You Can Expect Prices to Rapidly Increase On. And Charlotte, pleasure. Talk to you again, and good luck with your projects.
Thank you very much, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.